So there's a ton of crazy stuff happening to Senseonics stock right now, currently being down more than 4% today, while sitting at a few cents above the $3 mark. And as this means that we are currently pulling back again from the second spikes of almost 150%, what we are going to do today is give you an updated insight into what is happening to Senseonics stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so as mentioned before, we are looking at a medical technology company which main focus is to develop implantable glucose monitoring systems or CGMs for people with diabetes. But what truly differentiates Senseonics from all the other companies is its incredible progress it made on the commercialization of these devices to be able to bring them to the multi-billion-dollar diabetes space. But this isn't the actual reason for why the stock has seen the astonishing gains recently. In fact, it's the massive hype it currently experiences from retail traders that made it skyrocket more than 1,500%. And it got literally every single aspect we've seen on almost every other meme stock. We're talking about a single-digit price with a small float of just 280 million shares and extremely high short interest of 25%. Taking a look at the company and its product line again, it's its Senseonics Eversense XL product that made the stock so interesting for investors, however. But, and this is crucial to consider for our prediction at the end of this video, these devices haven't only received a lot of attention from investors. Ascensia, another major name in the global diabetic care market for example, has just partnered up with Senseonics. With its agreement, it will handle the distribution of the company's Eversense XL device in Europe and sales support. Accordingly, the opportunity for Senseonics is incredible if it comes to fruition. Ascensia has the massive expertise and experience that will enable the company to establish its presence in Europe. Moreover, Eversense is currently the only CGM product that the Food and Drug Administration has approved for use in the US. And as there are just a few CGM devices currently being prevalent in the US market, Senseonics has the edge over its competition by being the first long-term implantable glucose monitor. The Eversense device sensors can remain in place for close to 3 months, which massively exceeds the typical wear time of 3 to 14 days. Additionally, with stronger product and expansion marketing efforts in the European market and the growing US market, Senseonics could witness double-digit growth in the long run. And as this is also really important for the prediction at the end, from a financial standpoint, the company appears to be moving in the right direction as well. It generated revenues of almost $3 million, a gain of more than 7,000% on a year-over-year basis. Additionally, its cash and cash equivalents are at a healthy $180 million, with outstanding indebtedness at $110 million. Looking ahead, Senseonics expects revenues to fall in the range of $12 million to $15 million. Therefore, the company has a fantastic growth runway ahead in the fast-growing diabetes market. But as said before, execution risk remains high with the stock, and the company will need to continue to show results from its commercialization efforts to back up the massive prices in its share price. So there is certainly huge potential growth here in the company, but it's nevertheless a risky pick considering the current valuation. But up to now, the stock has been moving in the right direction in the past year, generating healthy shareholder returns. Senseonics Eversense CGM system is a robust product that could be a novelty in the diabetic care market. It has some unique features which give it the edge over its competition. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.